It's a bear. Good morning. Hey, what's up? This is Brian Kuzma with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. A little different cam up here. This is the Coral City camera down at Port of Miami, a little bit south of us. Normally I would show the beach here, the beach pier, live beach pier on YouTube, or the Deerfield Beach cam, which is a little bit north of us, but I thought this was pretty cool. There's some really neat coral down there. Beautiful day. Again, this is live on the Miami Beach Port of Miami cam. Well, let's take a look at what we got going on here. And let me reduce that screen a little bit, and we'll move into today's topic. Bull market, stage 3 starts. Well, what is stage 3? I kind of somewhat assembled a 4 stages here to what I believe that happens during our bull markets in gold and silver. And I think we're in stage 3 right now, and I'll explain that in a little bit. And, I'll take a look at some charts here and tell you what I think about the whole thing. Let's look at the prices this morning here. The coin said a bull, and the coin said a bear today, and it looks like we've got actually a bull starting out here. So let's see if it closes as high or closes lower. Gold currently at 1903.17. I'm going to do a quick refresh of that screen because it's been a few minutes since I've done that. And what do we got going on here? Okay, it was a little bit higher. Let's see what the range is here. We had a 1913 range overnight with gold and a low of 1897. So we've touched above that 1900 mark, and for all intents and purposes, we're pretty much at 19 right now. I don't see anything changing that in the near term. Although tomorrow, we got Friday coming up, Monkey Hammer Friday, so we'll see what happens. Silver actually was in that 28 range and seems to get monkey hammered a little bit here in New York in the latter part of the morning here. Let's see at the range here. 28.25 was a high overnight. I think I saw that this morning early, and 27.80 being the low right now. But for all intents and purposes, again, I think we're at the 28 range, and platinum is just hanging around that $1,200 range itself. All these metals, even at 1900, even at 28, and even at platinum at 1200, are still a good buy in my opinion. Just like $1,000 gold and $500 gold, and just like silver when it was $5 an ounce and $10 an ounce and even $15 an ounce, you're going to look back and say, wow, it was cheap back then. You're going to say that with this price. You're going to say that with $2,000 gold, and you're going to say that with $30 and $40 silver. And I believe you're going to say that with $1,300, $1,400 platinum as well. You're going to look back and say, boy, these prices were cheap. But if you get the opportunity to buy the dips, and there will be some dips here, that's for sure, but I think we're in a different stage of the market right now. And as I said, we'll go over that. Let me take a look at ZH here real quick. Oh, and by the way, I'd like to apologize for yesterday's show being so late. We had some problems with rendering the video. It was really computer hardware problems or software problems on our part. Took literally, we had the show done as normal. We would have had it cranked out by noontime, but took us till like, wow, 5 or 6 o'clock to get that video up and uploaded and done. Really sorry about that. We'll try to make sure that doesn't happen again. Maybe we should have just shut it down and tried it on a different computer. Live and learn. Let's take a look and see what's on ZH. Not too much today. Bitcoin crash, and it's an important lesson for investors. I didn't bother reading that because I think we already know the lessons behind cryptocurrencies and other markets as well. At Silver Squeeze, making an impact. This is done by Sprott Money. I clicked on this article here, and more or less, I'm not going to go into too much detail about it, but did you know you can get, this is Sprott selling his PSLV, which is basically more or less, it's like an ETF, for example. But I believe it's a very honest ETF, and I believe that they have the silver. However, I did do one show not too long ago that was explaining that I own PSLV. I stuck it in PSLV back in, 2008 or a long time ago. I opened up a little account with an IRA. I bought Sprott's PSLV. It was around $14 a share. It went up to about 17 and 21, and then it went back down to 14. And I went back to look recently, and for some reason it's way less. Now I used to think that Sprott's traded dollar for, you know what I mean, their shares were the same as 1 ounce, but apparently not. For some reason, I lost a lot of money by sitting on PSLV for a long time. I tried to call PSLV, or I tried to call up Sprott and find out how I lost money. Apparently, it wasn't what I thought it was. I wasn't buying an ounce of silver. So for every, like I thought I was originally, I'm in some kind of fund or something like that. Anyway, hard to explain. It's not ounce for ounce like you may think it is. It's a totally different product. So before you get into PSLV, make sure that you know what you're getting into. Let's take a look at his article here. He kind of talks about the silver squeeze effort is unrelenting. There are now over 82,000 Reddit users subscribed to Wall Street Silver page. And I've discussed the same thing. And another physical buying spree is planned for Wednesday and Thursday of this week. This is all good. However, I don't think it's having the huge impact that people think it is. 82,000 people, and most of them are very, very small buyers. They're buying a couple ounces at a time. However, I don't like the idea that people are putting too much into it. You build something up so much, like that last deal when what was it, May 1st or something like that, when silver was supposed to explode to the upside because all the silver Reddit guys were buying silver. At least that's what was implied. And then came May 1st or whatever day that was, I forget now. It was kind of a big letdown to some degree, but it wasn't a letdown. If you really know what's going on, you know how this stuff is played, and you know the strength of this Reddit group, you weren't let down. However, that's what I was waiting to see, because corporate media, a lot of people that had pushed the whole narrative made it sound like there was going to be something huge, and when it didn't, again, it was like a big fart instead of it. So, sorry about that. But no less, I do see the power behind the silver Reddit group as it grows and slowly takes ounces off the market. This is not a GameStop. Silver is not like a GameStop. And I don't think there's near as many players as there was in the GameStop deal either. But no less, there's big differences here. You're not going to see overnight price rises that are double and triple like you saw in those type of markets. So, but as long as they're buying it to kind of sit and hold, and they keep putting away physical silver, I think Mr. Sprott's right here. That's a good thing. Let's start with the basics. Over the past 5 years, the average annual mine supply is about 850 million ounces. Of this supply, about 600 million ounces gets devoured each year by industrial demand. So that's pretty huge. A lot of people don't know that. But a large amount of, again, silver that's newly mined out of the ground is used for industrial supply. The rest is an investment, and I would say investment and jewelry and such. Probably not as much in jewelry like it used to be. Hardly anybody wears, well, silver jewelry is not that big anymore. Think solar panels, cell batteries, and blah, blah, blah. Though it's impossible to know for certain how many ounces have been purchased by retail investors, more or less, he's talking about the silver squeeze. As that silver squeeze keeps buying up physical silver, you should expect rising premiums across all products in months to come. Consider yourself warned. Well, yes and no. It's not. The silver squeezers are contributing to the shortness of silver, but they are not the cause of it for sure. They're going to contribute to it for a couple ways. The 82,000 members out there, even if there was an average of 10 ounces a week bought by all of them, which I kind of doubt. That would equal a significant amount of silver over the course of time. But no less, this silver squeeze has been going on before the silver squeeze was even around. 2019, it was getting very difficult to get silver. And then all of a sudden, the 2020 shutdowns, everything just stopped. Whoop, screeching halt. And that's going to make it, that's just exasperated the issue. So big problems with short silver out there. Eventually, at some point, the paper prices, or not, eventually the paper prices are going to catch up with physical prices, I think, at some point. Let's see what happens. GATA.org, couple good articles out here. Bitcoin fever is a primrose path to digital servitude, something we've talked about, that as I've said, that banks and governments hate competition. They're not going to allow cryptocurrencies or crypto monies to survive in their current form. They're going to be either highly regulated or made illegal. And I believe ultimately what's going to happen is the Fed's going to come out with their own Fed coin, just like the Chinese have come out with their Chinese digital yuan. with not a lot of success too. My understanding that there's a lot of there's a lot of rejection to this digital yuan. It wasn't taken well when they introduced it in regions of China, and I'm hoping the same thing happens here in the United States. I hope people don't fall for a cashless society. It's the most dangerous thing that can happen to any democracy or in any country actually. Once you've taken away people's ability to have privacy with their money and actually physically hold money in their hand, then we're screwed if we get to that point. That's just my opinion. Good article here by Ambrose Evans. This is on gata.org. You should be reading this stuff daily. And I'll move along here so we can talk about a few other things real quick. Short subject, love Ted Butler. Ted Butler is the godfather of what is it? What am I going to say? The godfather of guys telling us how the market's been manipulated. He's been talking silver manipulation for God knows how long, telling us how it's done over and over. He's the guy that originally wore the tinfoil hat. If you put a tinfoil hat on him, undeservingly, for years and years and years, people called him crazy. You're crazy. The market's not manipulated. That was the narrative painted by corporate media and corporate financial media, mostly, who are totally clueless. By the way, if you ever want to go completely broke, listen to corporate financial media, Wall Street Journal, CNBC. Listen to those guys. They're idiots, especially when it comes to metals. Well, anyway, Ted Butler has explained for years how this market is manipulated. Again and again, I have stressed that silver has been suppressed in price for decades by the concentrated short position of 4 and 8 traders in the COMEX futures markets. Many have come to accept this, but my findings do not have universal acceptance. Still to this day, people still deny that this happens. But no less, Ted has been talking about this for decades. That's too bad because it's all that matters in determining price. It would be better if we were all on the same page. The big shorts have always been able to buy back the short positions that they added regularly, thanks to the steady supply of traders who readily sold out of long positions on rigged price sell-offs. The big shorts were able to buy back enough of their short positions to make it profitable. So Ted knows how this stuff is worked and how this is played out. And again, if you're not familiar with how the markets are manipulated, you need to read this article. I believe it's on silverseekers.com. It's called Short Subjects. Just type in Short Subject by Ted Butler. Make sure you read this again. This is the guy that has told everybody that it was happening before they even knew it was happening. And what else we got here? Well, anyways, he's just kind of talking about the scam of the big 8 banks. It's, again, same thing that we've been talking about for quite some time. Good article to read again, Short Subject by Ted Butler at Butler Research. Let's take a look at some prices here. I was talking about the different stages of these markets right here. And interestingly enough, which one is this? This is the gold versus silver price charts. By the way, I love macro trends. I think their charts are the best out there. Look, you can turn on and off recessions. I wish you could do that in real life, but show recessions. Don't show recessions, but we're going to keep the recessions up there just to kind of give us perspective. Let's take a look at our first market here in 1980. 1967, Nixon was having a hard time keeping gold in the vaults. France was requesting their gold back, and we were coming near to the end of the gold back in the Bretton Woods Agreement, gold back dollar and the Bretton Woods Agreement. Right about 1972, 71, 72, Nixon took us off the gold standard, made us officially a fiat currency. And if you take a look at here, look at the reaction of that. Well, here to me is what I would call the first stages right here. See that little blip right there in the market? That was the first stage of the 1980 market. And then you've got stage 1, which is the beginning down here, which was when we were taking off the gold standard, the catalyst, some kind of catalyst that created that first blip up right there. And there's our second blip, the second stage of our bull market here. And that was around 1973, 74, 75. I kind of suspect if you take a look at how fast that went up, a lot of people were expecting that it was going to come down equally as fast, and it did for a period of time. Right before, we did have a bull market in gold before 1980. Not many people recognize this, but in reality, take a look at that line right there. We went from, $48 an ounce, 1971, to where? I think $172 was the high at that point. That was a bull market, folks, and that money especially. We had a little dip here, and then here comes 1980, roaring its head here. A lot of that had to do with silver, with the Hunt brothers capturing up all the silver contracts and taking all the physical silver off the market. legally. Hunt Brothers never did anything wrong. If you ever read the real story of that, they did everything by the book, but comics and banks screwed them, of course. But no less, there's your first big bull market. So there's your third blip right there. There's what I would call the third stage, which is the bubble stage of the market. And of course, down here somewhere, we've got to have our fourth stage where we've got a big drop here, but it sits there for a little bit. And then our final stage is the bottom. Let's take a look at the market here, the more recent market here, and let's see if we can kind of identify a couple different stages there. I think the beginning of our bull market was probably in 2000 for this particular market right here. As you can see, prices were kind of moving around, and then you got a little blip there right around 1999, 2000, little bottom right there, 2001. But take a look. Here's our first blip market up here. And which one? We're taking a take a look at gold. That one kind of that was a strange market because you didn't see a clear second stage here, or what appeared to be like a little second stage market. However, I'm going to bring up something here. Maybe this was the beginning, first stage, and like this one right here, take a look at this mark. Perhaps this right here was their second stage. And here goes our bull market right here in this particular area right now. And then you got your fourth stage down here, which is the bottom here. So 1, 2, and 3. Kind of interesting. I'm just going to kind of point out some things here on graphs. When you visually look at the graphs and you take a look at how these markets almost kind of look similar, but they're just bigger. You know what I mean? The new bull markets are just bigger than the past ones here. A lot of it probably has to do with the printing of fiat dollars, I'm sure, too, and manipulation of markets. Gold to silver ratio, a pretty cool chart. I always like this chart, too. Again, Macro Trends does this. They give you a log scale, which allows you to change it for comparative U.S. dollars from now to then. But let's take that. No, that's not actually it. And then they get the recession here, show recessions. And same thing, you can see the recessions here. So gold to silver ratio charts, one of the things here that is pretty obvious that each of our major bull markets, or where the market actually bubbled and just went at a 45-degree angle straight up, not straight up, but you know, the mark 45, just the markets went way up real quickly, like you see these blips. And here's what I'm talking about right here, these right here. Here's where the markets just went crazy. Well, you got, this is interesting. Here's a corresponding gold to silver ratio chart. Each time we've gotten in that bubble territory, what has happened? The gold and silver ratio has tightened up dramatically. And again, taking a look at where this chart's going and where this chart is, I think we're heading into our next major bull market. And this one could be way crazier than the last one's, my opinion. So here you are. That's just my opinion. Take it for what it is. Let's take a look at the video yesterday that it took me 10 hours to get out, so really sorry about that. I got enough time to kind of go over a few, since there's so few comments because we got it out so late. Let me take a few comments or mention a few comments. And if you didn't see or talk about a few of the comments on here and acknowledge some people. If you didn't see yesterday's video, it was called Best Deals in Gold and Silver. I kind of wish you had seen it because boy, I forgot to plug the mic in here. I'm working on the computer mic. Sorry about that. I kind of wish you had seen it because I was speaking about the best deals in gold and silver out there, and I was talking about some fractional pieces and some foreign gold as well. But no less, if you get a chance, watch that video. Let me talk about a few comments in here. I'd like to thank everyone that watched this. Dario Perez, you're exactly right, kind of late. We were absolutely late. Again, apologize for that. I was starting to think I got paid for staying home early. Oh, I guess there's quite a few people noticed that I was late. Well, thanks for noticing. And again, I appreciate you still watching. Oh, Sarah Park liked that comment. Don't trust even Grandpa if the price is too good to be true. That's kind of what I was talking about. Is even the nicest, most well-intentioned people out there that are selling gold, if they're not in the business, they may not really know what they're giving you or selling you. So even Grandpa could pass along a fake piece of gold, in my opinion. Jigsaw Jazz, late upload and go. You got that, man. So again, I didn't realize how many people were waiting for me. I do apologize. Hopefully this video gets up early. Dr. Doggo Hunt says less premium equal more metal. Build a healthy stack, then buy some more. What you like? Absolutely. I appreciate you. You got the point that I was making in yesterday's video exactly. avoid buying the premium, and you'll save enough money and you'll make enough money on your metals that you can go out and buy pretty stuff that you really like looking at. Instead of spending too much high premiums for pretty stuff that really you should just be spending to stack higher, stack more metal. Battleborn says, thank you, sir. Going to a local coin store to pick up some Mexican pesos. It warms my heart to see LCS, local coin and precious metal stores. I'm glad you guys are shopping local rather than going outside town to do it. Donald Robertson says, my goal is to pay more capital taxes, gain taxes, so I avoid Roth IRAs, because kind of got me a little confused there. If you would kind of just explain that to me, why you would want to pay more capital gain taxes, Donald. But thanks for watching. I really appreciate it. D-Man says I should do some stuff on capital gain tax. I recently sold some. I bought them. The problem with that, D-Man, is that I'm not a tax expert, and I would be very, very afraid to start talking about shit I don't know about. If I said the wrong thing, I could really cost somebody a lot of money or screw their lives up badly. I mean, that's important stuff. So I kind of avoided. The only thing I talk about, I did one thing about sales tax and something else, a little about capital gains tax. But all I really spoke about is what you are obligated to pay. And that's pretty simple to find out about yourself. But again, I don't want to pretend that I know anything to give advice on taxes for sure. Hey, thanks for watching, D-Man. Michael Fernandez says, was it really a bull? I call bullshit. I guess you're talking about the coin here, Michael. Yeah, it really was a bull. And I got to tell you, sometimes I have to redo these shows in the morning, and I kind of got to, I start it and I said, it's terrible, or I screw something up, so I just restart the whole thing. The first flip this morning actually was a bull. But what I really do, if I restart the video, I respin the coin and I say whatever's on there, even though the first spin was a bull. And so, yeah, I read off exactly what the coin says. So, no, it's not bullshit, Michael. Thanks for watching, Mike. I appreciate it. Morgan Mullen says, one of the best shows on YouTube for real-world metal. Which one is that? I'm not quite sure. I don't think it's mine, but thanks for watching. Mark Pedry says, Leonard Zhang advised me to buy 90% silver dimes and quarters for bartering. I think I know who Lynette Zhang is, but I don't know why they would advise you to buy 90% for bartering. I don't know why, but that's what her assistant told me to purchase. Listen, Mark, you're not going to be bartering this stuff. That's highly unlikely. Even during hyperinflationary Germany, people weren't bartering their gold and silver and their expensive items. All they would do is go down and trade them for more dollars. They weren't trading it for food. It's unlikely that a farmer knew what a real diamond looked like or what a real piece of gold, the farmer wanted marks, of course. It took 10 more million marks to get it. So all people would do at the time in hyperinflationary Germany is they would take their gold or silver, whatever valuables they had. They'd go down to whoever the purveyor was or whoever the purchaser was, and they would sell it and get back marks for it. A hell of a lot more marks than they used to get. And they'd take these marks and they'd quickly spend them. So the idea that you're going to take your silver dimes and quarters and you're going to go down to Publix, or you're going to go over to your neighbor or somewhere and trade them for food is ludicrous. It really is. Sorry to say that is true. Anyone pitching that story, I think, is pitching bullshit or just really doesn't know what they're talking about exactly. So I don't believe that's true. I think that's misinformation that gets repeated out there, Mark. Just my opinion. However, I do like 90, and the reason I like 90 is it's cheaper. I mean, if you can buy a stack more silver at a cheaper premium, fine. However, 90 has gone up as well recently, so 90 premiums aren't as cheap as they once were, although they backed off just a tiny bit. But I do like 90, but not for that reason, not for bartering. You're never going to barter it. Maybe I should do a show on that sometime. Thanks for watching, Mark. I appreciate it. Ab B says the special coins getting close to basic coins. Kind of confused me a little bit there too. I guess I should read these before I mention it. Thanks for watching, Ab B. I really appreciate you watching here. Continue special coins make better profit. Oh, I know what he's saying. He's saying the collectible coins versus just buying silver. No, that's not true, sir. The special coins don't make a better profit when you're stacking. You want to just stack silver, the cheapest silver you can. And then the money that you make on that silver that you're stacking, the extra silver that you buy, go buy something pretty or something collectible. That's what I'm basically saying, and that's true. Thanks for watching, Ab. Mager says, M-A-G-E-R says, awesome. Like I mentioned in your video last week, Krugerrands have been a great deal. I like Krugerrands. Again, if you can buy them for spot less than $100 over spot, that's great. Maybe even $105. That's not a bad deal as well. And again, that's the beauty of having good local coin stores. Brand new 2021s for $4.99 over spot. My local brand new 2021s. Oh, Krugerrands. That is pretty. Oh, silver Krugerrands. Gosh, that's not bad at all. That's a good deal, dude. All right, well, I'm going to get out of the videos here and talk about what the best deals are out there, and it's still pretty much the same. Any silver that you can buy and pay not more than $5 an ounce premium for is the best deal out there, as long as it's a recognizable product and it's real. And the best way to get a recognizable real product is to go ask your local coin or precious metal dealer. They'll know and put you into the best products, hopefully. And what products might those be? That would probably be 1 ounce bars, 10 ounce bars, 90% silver like we were just discussing. What products won't they probably be? It probably won't be silver eagles for sure, because the premiums on them are just stupid now. If you're stacking silver for the mere fact of stacking silver, I would avoid buying them. At some point, I think the premiums are going to come down substantially. But it won't matter when the price of silver goes up, which it seems like it's going to. But meanwhile, stack more silver. Don't stack more premium. That's my opinion. Same thing applies with gold. Anything that you can spend less than $100 an ounce for. Did I already say gold? Well, anyway, don't spend more than 100 ounce for gold. Don't spend more than $5 an ounce for silver if you have to. If that stuff dries up, then of course you're going to have to spend a little more than 100 and a little more than 5. But meanwhile, focus on buying the most recognizable product that you can. Not recognizable by you, but recognizable by major dealers for the cheapest possible premium that you can. That's my best advice to anyone stacking out there. And that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals. I'm a second-generation dealer servicing the southeast Florida coast here for decades right now. Started this in 1977 working for my family, and I've been in this particular location since 1995. So feel free to give me a call if you live in my area and you want to do business with me anytime between 10 and 4, Mondays through Fridays at 954-493-8811. And that's really about it. Appreciate you watching, and let's see what happens. Talk to you tomorrow, and have a great day.